Good evening, everyone. This is Mark here at TapeTally.com for your Week 15 recap. Let's make it a quick video today. Let's just take a look at some of the stats for the week here. We were down about 2%, give or take, about 0.5% either way for the markets. SPY was down almost 2%, and one of the biggest leaders down was the Russell 2000, the smaller cap stocks. Gold was up slightly, but we'll go through that chart. What else? What else do we have here of significance? Year to date, it came down a bit. The Nasdaq is obviously still outperforming quite a bit because of Apple. VIX is down still quite a bit. The Canadian markets are basically even on the year. So let's jump right into it. Let's take a look at. Last week I brought up this chart, and we took a look at Mondays. Let me leave it like that. So we took a look at Monday here, starting in the middle of March, and we took a look at that Monday, and market tried to break out, failed. Next Monday it tried to break out, failed, and first week of April on the Monday the market tried to break out and failed again. This was the Monday, and finally we saw a market churning here to the side. Breakouts not following through, and we saw what happened. We got quite a large down day. It was down quite a bit on Monday and Tuesday, and we got obviously a relief bounce here. Now, one thing I like to do, because there was a bit of panic, I guess, early in the week. One thing I like to do when this happens, and I step back, like I've basically been in cash here for the last 2 or 3 weeks, kind of in anticipation of this because of what's happening, with the breakouts. The market is telling you that it is weak for the time being. Now, one thing I like to do is I like to step back. So let's take a look at weekly chart of the S&P 500. What have we done really? The damage suffered last week. Okay, yes, we were down to 2% last week, but really, if you look at the longer term chart here, we are still pretty well dead center right in these in this channel here building. So for me, I would say that maybe short term I'm a bit bearish because of the way the individual underlying stocks are not holding up, but long term I'm sort of neutral, and I'm leaning towards the bull side here. The market is still in this uptrend longer term, and we'll see where it goes from there. We switch this over to the daily time frame. Yes, you look at let's add a screen draw here. You look at this. It's a very rough line there, but I mean, it's still going up. It's still stuck in this channel. That is not a good. Let me erase that. How do I erase this? Well, I should learn how to use this thing first. Anyways, so basically we're still in an uptrend. We are seeing that, now the market is weak. I've been talking about waning momentum for a few weeks, and we did see the follow through to the downside here. Now, whether the market can hold up here and bounce, or whether it just follows through the downside is somewhere where we'll have to see. Now let's switch over to, there we go. Okay, let's switch over to the gold chart. We talked about this earlier in the year. We talked about how this market, let me draw a nicer trend line here. We talked about how this market was following a trend line here, and it bounced just as we had expected here early in the year, and it failed to break through this resistance point right here, and it's gone down. Now it's testing this trend line again, and this is kind of the make or break it point for gold. Now if it bounces here, I mean, we are seeing not a bad little pattern. If it starts to build this triangle here, or pennant pattern, we'll see how it works out. But gold does seem to be a bit weak. I mean, if it breaks this is kind of the first signal that the gold bugs are starting to get a little bit weak, so we'll have to watch that one. What else? Let's take a look at oil weekly time frame here. We talked about it breaking out sometime. No, I guess here early in the year, and I mean it hasn't done anything. It's been dead money for years now, since the crash, since the oil crash there. So the VIX, I mean, they're still taking it. They're still taking volatility out of the market, but I mean, with every little down move in the market, this is going to go up here and back and forth. Canadian markets, which are basically even on the year, same kind of thing. We talked about that. We talked about it breaking a trend line here, breaking from a rising bottom, and it really hasn't done too much on the year. Like if you take a look, we're basically right. Here's the price from the first of the year to here. I mean, we've done nothing all year in that market, and that's mainly due to oil prices, as Canadian stock markets are tied to commodities, and namely oil, quite a bit as well. So that's about it. So where I see us going next week, I think we will kind of chop sideways. We could see some more downward movement, but number one thing, we have to keep an open mind. We cannot, put it out of our mind that this market could jack higher here and just take out all the shorts. Market does whatever it can to frustrate the majority of participants. So you have to think about what will frustrate the majority of people here. I think a lot of people are anxious about this. They think that it may go down, so they're not 100% sure. Could we enter into a volatile market as we saw in 2011 here? Kind of the same pattern is, we had a good January, February, March, and then starting in basically middle of February, we were just volatile from here to all the way to the end of the year. Basically, it just got more volatile as the year went along, and we finished basically flat on the whole year. But I mean, that's a lot of movement in there. So I mean, we're sort of following that same pattern. You look at January, February, and now March seems to be the month where there may be some increased volatility. So you have to be prepared for that. That's all you can be. So that's about it. Trade well. Have a great week.